What if I told you you could finally afford your dream home, but you might still be paying for it when you're 80 years old? Sounds insane, right? Well, that's the idea being discussed around a proposal linked to Donald Trump, the 50 years mortgage. And today, we're breaking down the truth behind it, because this could either help millions or quietly trap them in lifetime debt. Welcome back. This is where we break down global finance, real estate, and wealth strategies in a way that actually makes sense. If your goal is to build wealth and avoid financial mistakes most people make, subscribe now, because this topic, it affects how people will buy homes for decades. What is a 50-year mortgage? Let's start simple. A mortgage is basically a loan you take to buy a house. Most people in countries like the US use a 30-year mortgage. That means you'll spend 30 years paying back the bank plus interest. Now imagine stretching that same loan to 50 years. Why would anyone do that? Because it reduces your monthly payment. For example, a $300,000 home might cost you around $1,800 per month on a 30-year plan. But stretch it to 50 years, and that could drop to maybe $1,200, $1,300. Suddenly, more people can afford homes. But here's where things get interesting: the housing problems. The housing problem. Let's start with the real issue. In countries like the US, UK, Canada, housing is becoming extremely expensive. Prices are rising. Salaries are not keeping up. Young people can't afford homes. So what happens? Instead of reducing house prices, the system tries to make payments easier. That's where the 50-year mortgage idea comes in. The hidden truth is, lower monthly payments sound great, but the real question is, what's the total cost? Because when you extend a loan, you're not just paying longer, you're paying more interest, a lot more. Over 50 years, you could end up paying nearly double the value of the house. Let that sink in. You buy a $300,000 house and end up paying $600,000 or more over time. That's not a discount. That's not affordability. That's a lifetime financial commitment and delayed financial pressure. The real dangerous, here's where it gets even more serious. 1. You build equity very slowly. Equity means ownership. With a 50-year mortgage, most of your early payments go to interest, not ownership. So for years, you don't really own your home. The bank does. 2. You stay in debt longer. Instead of being debt-free in your 50 seconds or 60 seconds, you might still be paying in your 70 seconds or 80 seconds. That's risky, especially without stable income. 3. Retirement risk. What happens if you lose income, you retire, or inflation rises? You're still paying. 4. The psychological trap. It creates a false sense of affordability. Just because you can afford the monthly payment doesn't mean you can afford the house. This is how many people fall into financial traps. Why this idea exists. So why would this even be proposed? Simple. Housing prices in many developed countries are becoming too expensive. Instead of making houses cheaper, the system tries to make payments look cheaper. It's like stretching a problem instead of solving it. Even Donald Trump himself suggested it as something that could help a little. But many experts believe it doesn't fix the real issue. Who benefits? Let's be honest. Who really wins here? They get access, but at a long-term cost. The smart alternatives. So what should you do instead? Here's how financially smart people approach home ownership: by what you can truly afford, not what the bank approves, what your income can handle comfortably. Choose shorter loan terms. 15-20 years may feel harder, but it saves you massive money long term. Make extra payments. Even small extra payments each month can cut years off your mortgage. Think like an investor. Some people rent out part of their home to generate income and reduce the burden. Generate income from property. Rent part of your home. Turn it into an asset, not a liability. The final verdict. So, is the 50-year mortgage a good idea? Short term, it helps people enter the housing market. Long term, it could keep people in debt for life. And that's the real danger. Now I want to hear from you. Would you take a 50-year mortgage just to own a house? Or would you rather take control of your finances and avoid long-term debt? Subscribe so you don't miss it.